Did higher interest rates slow down the market this week? Let's find out. Hey everyone, this is Brandon here with your weekly Orange County housing report for the week ending March 22nd, 2026. And we did start the week this week off with interest rates right around 6.11%, and we ended at about 6.22. So rates did go up again. It's the third week in a row that rates have gone up. But if you put this into perspective from last year, at this time we were at 6.67%, which was a lot higher, and the market was still actually doing pretty well last year. So we're less than last year. We have less inventory still, and the market is still showing signs of higher demand. Especially in the 1.4 or less category. If you look at the new listings this week, we did have less that came on. My theory for the next maybe 2 to 3 weeks is we're not going to have as much as we're going to see post Easter. Right now, people are prepping for spring break, they're prepping for Easter. A lot of times, people don't want to list right about now. But right after Easter, we're going to probably see a little explosion of inventory. So, for buyers, if you've been not finding what you're looking for, if you're sad about the interest rates, or if you just got outbid by 16 offers like we did a couple weeks ago, you're going to get more inventory come, let's just say later April, early May, and it's going to trickle on all the way till probably August or September. If you're a seller, strategically, the next 2 weeks might be a little bit less demand if the spring breakers are gone and people that are doing their Easter family traditions. So that might be interesting time to list, but right afterwards, demand's going to become pretty much higher. So around April 15th ish, if you're listing a property, I think demand's going to pick up a little bit. These are all just my theories. I look at the data every week and I just see kind of the statistics of what happens. You'll just see on holiday weekends or when people are out of town for spring breaks and doing the family time, you're going to see less listings and less demand. And that's just common. It doesn't mean you have a bad product. You still need to price appropriately. The most success that we're seeing are people pricing maybe just a hair under market, getting multiple offers, and then you're controlling which buyer you really want, the strongest one. So that's a listing strategy that we often try to implement if we can. And other than that, I think that the market's looking good. The war's not helping. People are reading the newspaper and getting a little bit nervous about everything. And I understand that. But if the first quarter was any type of litmus test of what happens when rates go down, it was a good example of you don't want rates to go below 6%. It would have been chaos. And this slowed it down a little bit. And again, I think it's going to be healthy overall once things get settled out in the Middle East. I think buyers are going to be happier again. Hopefully, rates will come down. We'll see. Right now, they're not expecting any. Well, maybe there's one cut on the Fed dot plot right now. So the next meeting is going to be very important as to if they actually take that off the table and they'll have no cuts this year or what they're kind of thinking. They're going to be looking at inflation numbers and wars and inflationary type of existence. So they're worried about that and they don't want to cut in an inflationary event. So that's my take on this week's mortgage and real estate news. If you have any questions, please just give me a shout. Hope you have a great week. Take care, my friends. Bye bye.